There we go. We're recording it today. Ari, tell us one of the things that you and I talked about was fraud. And that really is a hot topic right now. In fact, I was on another call earlier this week and it came up again regarding title and deed fraud. So it's something that we're hearing a lot more frequency. What are you seeing mostly in the market right now?
Yeah, so it's fraud is on the rise. It's been on the rise for the last few years. And in fact, there was a alert from the FBI recently, and they gave a statistic that between 2020 and 2022, there was a 72% increase in victim loss crimes with a real estate nexus. And so you're seeing the biggest two are probably wire fraud and deed fraud. Um, and they both generally involved, impersonating someone who is entitled to money and getting the money. And deed fraud is something that is probably become the biggest problem. And I'm seeing, I mean, it runs the gamut, but I'm seeing like old school types of deed fraud where someone will alter a notary stamp and forge a signature and just record a deed and like an uninsured transaction, not through a title company. But then I'm also seeing a big rise in fake IDs where people will I mean, the nice thing about a fake ID is then you don't need to forge anything. You just sign your own signature. And that way they can just go right through a title company. And I've seen imposters, they've come into title companies with their fake IDs. Some of the fake IDs are really, really good. I've seen some of them that are not so good, like someone with their eyes closed. So, but but that guy was an organ donor on it, so I thought that was nice. But um, but but it can be difficult to tell sometimes. That there's software that could be used to tell was this picture taken like a selfie or was it an actual driver's license photo. So there's different um, things that title companies could do, different things that realtors can do. But you know, in the past number of years, it's really run the gamut. I've seen forged releases of deeds of trust, forged releases of list pendants. I've seen one where both sides of the transaction were impersonators, and they used a fake cashier's check, converted it to bars of gold, and put it on a private plane out of the country. So you can use your imagination, but it's definitely on the rise right now.
Yeah, thank you. Well, yeah, it's something that people are very creative about, right? So, Parker, I'm going to jump over to you, and I want if you can share with us a look back at 2023. I think for most of us in real estate, it's probably been one of the more rougher years in real estate for a lot of different reasons. What did you see? What's anything that surprised you about where we've been in 2023?
Yeah, I think my biggest surprise was the resiliency of the housing market, after everything that it was hit with. So, our view was that we'd see, modest single digit declines for national home prices coming into the year because, we had gone through the massive rate shock from two and a half to 7.5. And so obviously we expected a meaningful hit to existing home sales, which we did see. But the thing that was really interesting was the response of sellers. So, we assumed that sellers would continue to try to list their homes at a similar pace, but what we saw was in fact that potential sellers were pulling back. And so sellers, I'm talking national aggregates, and Phoenix is actually an interesting situation because I think I was out in maybe February to have an executive roundtable that we hosted, and I was talking. I think right before I talked, Goldman came out with their 25% downturn for Phoenix call right at that moment, and I was saying I didn't see that in the cards, but certainly that's not what happened. I mean, Phoenix has stabilized more so than some of the other hot markets that had started this year. And again, it's been that the response of potential sellers. So with sellers pulling back and not listing at a typical pace, inventory hasn't built like what we were expecting. So that's why we've seen more resiliency in home prices, is the fact that, we've had a relatively balanced market. Recently there's been a bit of a tail off with mortgage rates going back up to 8%. Certainly in Phoenix and, the broader US, we've seen, new listings have continued to kind of recover a little bit. So the pullback was more at the beginning of the year, and then over the course of the year, sellers have been dipping their toes back in the market, but pending sales and existing home sales have really started to taper off. So we've seen some deterioration recently, both Phoenix and nationally, in terms of month supply. So how long it would take to turn over the inventory. Hopefully, we're watching rates very closely. If anyone cares to see daily updates, I post on Twitter all the time about where mortgage rates are going. Yesterday, we were at about 7, just above 7 on my implied mortgage rate. Obviously, there's quotes below that, but this is kind of the market aggregate. So we're getting close to a 6 handle on mortgage rates, and I think that'll bring some of the buyers off the sidelines and might see some more resiliency in 2024. It might get a little bit of a surprise again. But certainly the rapid move that we've seen in the market, over the past few months, hoping to see that start leveling off now that the rates have moved much lower and hopefully settle in. So yeah, I think that was the biggest surprise. Aside from, most economists were calling for a recession. We weren't in that camp. We were in the soft landing camp. So we got that one right. But that's part of why we saw the upside surprise in home prices. But also I think that was one of the big ones, that a lot of economists were calling for the recession. Most have pushed that out to 2024 now, or just completely canceled it and gone to the soft landing view. We're still in soft landing view, but expect to slow down ahead. So yeah, it's been a very interesting year with some positive surprises. It wasn't as bad as it could have been, I guess, is the main takeaway. So
yeah, well, that depends. Yeah, the market's been bumpy this last year, right?
yeah.
And as you look into 2024, is there anything where you mentioned a soft landing? We hear rumblings that to anticipate the Fed lowering rates, to kind of juice the market, maybe Q2, Q3. What is your feeling in regards to moving into 2024?
Yeah, so our view is that the Fed will start cutting rates. Previously, we were thinking around mid-year, but the recent data is coming pretty well in terms of inflation data. So inflation does look like it's moving towards their target. There's been, as I mentioned, we expect softening ahead. So we had a really, really hot third quarter. Fourth quarter is shaping up to be a lot softer than that. Expect some of that softness to persist. So putting all that together, that tees up the Fed maybe cutting a little bit sooner than expected. The key thing on the Fed cutting, though, I hear a lot of people talking about, the Fed's only going to cut if there's real stress, but they're trying to normalize. Like 5.5% is obviously not normal. So what they're trying to do is make sure inflation's durably returning to their target, the 2% inflation. And if it looks like that's happening, then they want to start dialing things back and get the Fed funds rate back to where they think it should be, which is say 2.5 or 3%. So the soft landing scenario, pretends that we have labor market normalizing, wage growth comes back down to something a little bit more normal, and then the Fed can start dialing things back and get to a more normal rate. So in that scenario, they'll probably cut 25 basis points a meeting, a nice measured pace. And so we expect, 10-year Treasury to keep kind of trending lower, maybe into the low 3s or 3.5% range over the next couple of years. So hopefully get mortgage rates back to the 5.5% range, maybe in a nice stable equilibrium if the soft landing is really pulled off.
Right. Yeah, that would be music to my ears too. Be back in the 5s. It just opens up a lot more affordability for people, right? And especially with the appreciation in our market, having the lower interest rates just is what we need to keep people being able to afford homes, truly.
Yeah, and that is the conundrum, though, is that it allows more people to afford homes, and so then prices will go up more than they would have otherwise, and which hurts affordability. So it's a double-edged sword, and I think because of that, we'll probably be in a relatively stretched affordability environment for some time. It's going to take time for income gains to chip away at the price gains that we've seen, and even with rates coming down, that's certainly going to help. But I think it'll be a little challenged for a while as we work through that affordability challenge.
Yep, agree. Oh, and I also want to throw out to our audience that if you have questions that you would like to ask our panelists, please feel free to put them in the chat or the Q&A section on Zoom, and we will be addressing questions throughout the class today. So Ari, I want to pivot over to a little bit more in regards to you and I were talking about a recent case that you had in a deed fraud. Share a little bit more with us in regards to how are the realtors being targeted? And, because I'm hearing stories also in regards to people getting caught up in what they think is a legitimate transaction, only to find out, after the files progress to the title company, we've got something very suspicious.
Yeah, it's difficult, for realtors because and by the way, I should mention on my website, ramraslegal.com, there is a frequently asked question, what is deed fraud? And I have some information there. But with realtors, it's really making sure that when a seller approaches you or you get a lead, for example, through Zillow or something like that, that it's a legitimate person who's the actual owner of that property. And that can be difficult to determine because the fake IDs make it extremely difficult to determine because you can meet someone even in person. One of the kind of red flags is that the person who doesn't really meet you in person or even over like a Zoom like this. And who's kind of flaky and difficult to get a hold of, and that's sort of one of the red flags that people look for, who are impersonators. But as I say, the fake IDs do make it very difficult, and I mean even over Zoom. I mean, we know there are these deep fakes now, and I haven't seen that utilized, but that's what's coming next, and so. The best thing that a realtor can do to try to vet is this a real person? Talk to them about the property. Does it seem like they have knowledge about the property, depending on how long that they've owned it? It's been one suggestion has been check their address, compare that to the assessor's records. But those can be manipulated potentially as well. Some people will contact the assessor and get this assessor to change their records, and so that's a difficulty as well. So a lot of times it just depends on how creative the fraudster is, and how a lot of it is organized crime, and they don't just do, these aren't one-off frauds. They do many of them, and so they're getting better and better at it a lot of times, and so they may slip up and they may give you a fake ID with someone with their eyes closed. But I saw that transaction closed by a title company, and so things fall through the cracks. So the first line of defenses are the title companies and the realtors, both. The Association of Realtors has come up with a list of red flags, and for anyone who doesn't have those, I could provide those. The Land Title Association, American Land Title Association, has come up with a list of red flags. I would recommend that realtors familiarize themselves with those. And a lot of individual title companies have their own lists as well. So that's something that probably Landmark can provide. I could provide that as well. The biggest red flags by far are properties that are vacant and unencumbered. And so that could be raw land, it could be a house that no one is living in, and those are the ones that are targeted, and usually the unencumbered ones as well. And I think there's a couple reasons for that. One is that when you sell it, you get all the money if it's unencumbered. The second reason is you don't have to worry about trying to get a payoff statement, which, if you don't actually have the loan statements, the loan number, et cetera, I think that's another reason for that. I think it's about realtors kind of really being on their toes and having that on the radar, especially with those types of properties, and also encouraging their buyers to get the best title insurance policy available. And generally, we're talking about a homeowner's policy on a home, because it actually could provide coverage post-policy for this type of thing, which is pretty remarkable. In the past, years ago, title insurance policies didn't cover anything that happened after you got it, post-policy. But now the best policies actually do cover that. And so most of the clients that I represent, not through title companies, are the ones who either have an older policy or can't find their policy or something like that.
Interesting. Yeah. And what are your thoughts in regards to, and I've heard advertisements for, deed fraud insurances along those lines? Is that something that's legitimate? Are they really able to protect people against deed and title fraud?
No, those are not legitimate. In my opinion, I know that those types of companies have been investigated for deceptive advertising. Basically, what they're doing is alerting you after the fact. And most counties and states around the country actually have that service free of charge. So there's no reason to pay someone for that. And in fact, in Arizona, there's actually a new law that requires the counties to put that kind of a title alert service in place. And they're actually required to do that by 2025, the beginning of 2025. But almost half of them, the biggest counties, do already have that service in place. That frequently asked questions part of my website actually has a list of all the opt-in sites for that. And we can talk more about that, but that's sort of an after the fact alert. It doesn't prevent the deed from happening, and it doesn't prevent you from having to incur a lot of attorney's fees potentially if you don't have title insurance. So title insurance is the best measure, but that kind of alert service can come in handy, and it can actually be valuable.
Yeah. Yeah, I jumped on the county recorder's office website on Tuesday, and it took less than a minute. They did a verification of identity, and was able to set up for title alert. And it was, and key is, if you get something in the mail from the county recorder's office, whichever county you're in, you need to be opening it up and reading it, right? Because that's another way they are alerting you that there may be an issue.
Yeah, and the nice thing about this new county alerts service is they actually can alert you by email, which makes it very, very easy. One of the issues with mail is that a lot of people, after they do a deed fraud, they change the address that with the county, so your tax bills may start to go to someone else, for example. But this title alert service, according to Maricopa County, they just launched the service over the summer. They already have about 50,000 people who have signed up for it, and like 100,000 names. Basically, as soon as something is recorded with your name on it, they'll send you an email. You can open the document, see what it is, and if it's not something that you were involved in, that's your cue to, call, a title insurance company, maybe an attorney if you don't have coverage under title insurance, the attorney general, law enforcement. By that point, as I say, it's already done, but things could possibly be done to mitigate the damages if you move quickly, because part of the problem, and one of the cases that I have right now is, there's an out-of-state owner. He owned this property, it was vacant, and by the time he found out about the fraud, the property was already flipped. The new buyers are already renovating it, and it makes it a lot more difficult and complicated to deal with at that point. Whereas if you're alerted to it right away, and you can alert, there may be an innocent buyer, you could alert them before they start doing anything with the property themselves.
So I'm gonna pivot over a little bit more with Parker in regards to, as we look into 2024, are there things that you're seeing or that we should be, mindful of, watching trends that are going to impact the real estate market?
Yeah, I mean, certainly the labor market is the key thing to focus on. People need jobs to buy homes, so and that's the key thing to focus on in terms of the soft landing narrative. So certainly right now we just got jobless claims this morning. Still looks pretty solid. Doesn't look like there's any stress building there. Initial filings for unemployment are very low. Continuing claims are starting to go lower, so the unemployed population is getting a bit smaller. Which is a bit in contrast with the official BLS data. We get an update on that tomorrow through November. So unemployment's been rising in the BLS data. So that would certainly portend lower home sales if that continues. But again, we think that the jobless claims data, the challenger job cuts that just came out this morning, also are very solid. So there's some mixed messages right now, but again, the demand side looks pretty good. Income growth has been stable. It's been cooling from very hot growth back in early 2022, but still very solid. So as long as inflation continues to return towards the Fed's target, income growth outpaces that. We've got real income growth that's positive for home buyers. If we have interest rates coming down, obviously that's a positive for home buyers. So certainly, putting it all together, we do see, a relatively positive view for 2024, especially relative to 2023. Not expecting us to get back to pre-COVID type activity, but certainly a bit of a step up in activity, at least relative to what it was this year, which isn't saying much. But yeah, so certainly from the demand side, that's what we're seeing. And then on the supply side, like I said, the new listings, really the key thing to watch is how the sellers are responding to the changing conditions. So right now in Phoenix, the median days on the market's about where it was pre-COVID, which is not what you would expect for a stressed market. It's been around that level for about 6 months too, so it's kind of stabilized from that perspective. But there's not quite as much of a frenzy as there used to be in terms of home selling in less than 2 weeks. That's down, below the pre-COVID average now. So things are kind of normalizing, but again, it's really all going to come down to the potential sellers. So there's certainly the headlines about Airbnb sellers and institutional investors, and that is a bigger concern for markets like Phoenix than some other markets. So those would be some of those potential sellers to keep an eye on. But at the moment, like I said, it looks like we've got a good trajectory that hopefully things will start to turn there. So
headlines on Airbnb, I missed that one. But what were you seeing?
Oh, I mean, there's been, I think, calls of all of the Airbnbers that bought during the pandemic not being able to rent out their properties for the rates that they used to get or at the pace that they used to get, and so that they were going to have cash flow issues and need to sell all of their homes, and it was a widespread issue. And so all of the Airbnb owners were going to be listing their homes at the same time, flooding the market, causing prices to collapse. That's been in the headlines for a couple of years now. So it's something to certainly keep an eye on. Again, there's a new data provider actually that came out, Parcel Labs, They have something to check out on Twitter also. They have some good posts about institutional investor activity across different markets, and so that's a great thing to keep a pulse on, whether or not institutional investors are listing. I think they have a decent track on Airbnb listings as well, but certainly, yeah, that's something to keep an eye on in a market like Phoenix. It's not really much of a national story, but if that does continue, then you would maybe see a little bit of isolated stress from that. But the overall share of Airbnb and institutional investors, at the metro level is relatively not significant even for a market like Phoenix, but even though it's larger than the typical market in the US.
Well, we could definitely use the inventory. So Parker, we have a question in the chat, and I'll repeat it first so that everybody can hear this question. The housing market has been driven by huge one-time distortions over the last few years, such as the rush to WFH and the drying up of existing home sales. Looking forward, are there any other one-time events like these that you're keeping an eye on? And then as a follow-up, how do you think about what do you think about the natural long-term rate of growth in housing prices?
Good questions. So yeah, the pandemic obviously turned the real estate market on its head. The work from home enabled people to live a little bit further away than they would have. Remote work allowed people to live in a completely different place from where they used to work. So certainly that's been one of the tools that buyers have used to manage the affordability challenges. So, if you only have to go into the office, say 2-3 days a week, then you might be willing to deal with a longer commute than you would have otherwise because of that. And so you can buy a house that's a little bit further away for get more value for your money that way. So I think that trend will continue. What we've seen in terms of the return to office, it seems like it's stabilized at this point. There's some real-time data on that, and it's kind of say 2 to 3 days a week seems to be the norm. So that remote work demand, I don't think is going to be a big change, but probably something more persistent. The remote work is, I think it might be leveling off a little bit too. It certainly surged during the pandemic. It's been great for parents and mothers and disabled population to be able to get jobs that they wouldn't be able to manage otherwise with the commute. And so that's been a great thing for those workers and for housing demand. But going forward, again, I don't see any of those big types of shakeups happening. Hope, knock on wood, we don't have any major exogenous shocks like what we've had with the pandemic. You still have millennials are still aging into their prime home buying years, so you still have solid demographics underpinning at least the next, say, 5 to 10 years before that starts to taper off. So still have good demographic tailwinds from that point. But really, I think the biggest factor to keep an eye on is, again, the overall health of the economy and inflation. We seem to be on that glide path back to what we want for inflation, but if we do get we have two hot wars right now. Any escalation on that front or disruptions to the oil markets could certainly rekindle some more inflation and goods inflation. So that's a key risk to watch. And in general, about the longer term home prices, typically you need to have some type of anchor to incomes. So some markets might get more disconnected from that if they have more retirees than others. Then it's more about household wealth than it is about incomes. But generally, that holds across markets and across countries, is that anytime home prices get too disconnected from incomes, then you do have a reversion to that mean. So over the long run, home prices should grow roughly in line with income growth. So that's why it's a key metric to watch.
Yeah, I think it sure feels like we've been through the worst of it in 22, 23, and that things are definitely looking much brighter going into 2024. Mm-hmm. So we'll hope that continues. Ari, one of the things then, and being as a real estate attorney, I know you see a lot of different things that happen in addition to, fraud and what you're seeing on the deed and title side, what other things are you seeing from a dispute standpoint that would be helpful for the real estate agents to be mindful of during transactions?
So yeah, it's a good question. I mean, I think, you know, I do a lot of work for title companies and a lot of title claims that involve things outside of I would say things that a lot of realtors have control of, like encroachment issues, easement issues, things like that. But I also see, especially as a mediator, a lot of buyer-seller disputes, and I think it can happen a lot in situations where, I mean, where the market is hot and strong and prices are rising, the buyers are usually fine with anything because they're making money. When things slow down, you know, and especially if prices start to go down, that's when you see some buyer's remorse, and that's where you see a lot more buyer-seller disputes. Buyers will start to really go through the property after closing with a fine-tooth comb. They may, if they see anything that they will claim was like a hidden defect, they'll frequently try to go after the seller and maybe even the seller's realtor. And so you see a lot of those types of claims. The bigger ones have to do with any kind of mold that may be found. I see quite a number of those types of claims. The biggest things that the realtor can do, that realtors can do to protect themselves from and their sellers from those types of claims is to, you know, disclose, and that's, I know they hear that all the time, but it's especially true in a market like this. But other than those types of claims, when the economy starts getting shakier, you start to see some mechanics liens claims, and because that's when contractors may not get paid. And so I haven't seen those claims actually for many years, and I'm starting to see mechanics liens claims again, which may tell you something about potentially where the economy is or where it's headed. And I don't know if Parker would agree with that.
Yeah, and I think in terms of the, you know, the local market, you know, talking about price declines, saw pretty decent declines in 2022. I think, you know, on the measure of 10% declines or so at their worst, but they have stabilized, you know, a bit recently. And, you know, I think the local market, you know, there's still solid migration coming to Phoenix. So I think that should certainly help stabilize things going forward. But, you know, affordability still is stretched, so that will be a headwind to, you know, robust home price growth going forward. And the little bit of a recalibration that we had with rates going up to 8% plus, you know, could have a bit of a dip in prices again early, you know, late this year, early next year, before we kind of get back to maybe muted price growth thereafter. But yeah, I think overall things are panning out well for the soft landing narrative at the moment. But you know, a lot of things need to go right, and Fed needs to start cutting back, you know, relatively short over here.
Yeah, it's going to be, I think the first 2 quarters of the year will be, you know, very interesting and will probably be the best indication of where we're at for the second half of the year, right? Back to you, Ari, a little bit too, you know, in regards to what you're seeing in regards to disputes, and, you know, working with clients. Any other tips for our real estate agents in regards to, I mean, yeah, we tell them to disclose, but anything that they should be, you know, acutely aware of and focus on with their clients? Any tips for us?
I mean, I think it depends on what type of client they have. You know, what we're seeing, what I'm seeing a lot is wholesalers, quote unquote wholesalers, and people who are looking to, you know, buy distressed properties, and they'll call owners, knock on doors, and there's more and more and more of those. You know, they take a seminar on how to do this, and they come up with their, you know, contracts, and they're not AAR contracts, and they're often very one-sided, and a lot of times they'll record the contracts, And it can be really problematic, especially for title companies if they record it like in a gap where the title company can't even see it because it's just before closing, for example. You know, if it is that type of property or that type of buyer that a realtor is working with, I think it's just important to make sure that the owner hasn't already signed something with someone else, because that's what they do. They'll say that they'll come up, a wholesaler will approach them and they'll sign a contract to sell the property to them for $100,000. And then next week's or next day, they'll get another knock on the door, someone offering to buy it for $105,000. Well, okay, sure, they'll sign that as well. And a lot that can be a big headache, both for really everyone involved at that point.
No, good point. Good point. I know we're coming up at the top of the hour. I think we've addressed all of the questions in the chat. If there's any other questions, please feel free to, from our audience, please feel free to jump in and leave a message for us. We'll definitely address your questions. Parker, just to kind of to wrap up the day for us, is there anything that you're watching or you're interested in that you think will impact our real estate market?
Yeah, I mean, one thing I haven't touched on, I've been talking about potential sellers. You know, one potential seller is the new construction side, which, you know, in a market like Phoenix is pretty significant. So that is something that we're digging into, trying to, you know, look at the relative amount of new construction compared with overall inventory and the overall existing home market. You know, surprisingly, we were actually doing work on this yesterday, and you know, mentally you think of Phoenix up there with, you know, Austin and Nashville and some of the really high growth markets and, you know, strong construction markets, but actually Phoenix is on the lower end of that in terms of new construction relative to the existing home market. So I think that's something that's buffered the housing market in Phoenix more so than a place like Austin. And you know, Austin, it's almost like half of the supply is coming from new construction. And the big thing there, you know, aside from just the amount of supply, is the fact that builders are in the business of selling homes, and so they offer incentives that it's difficult to compete with as an existing seller. So that's been kind of the you know, the story of 2023, and I think that'll continue into 2024. Is that, you know, new home builders are really dominating right now because they can offer the rate buy downs that are very attractive. And, you know, they're willing to cut prices and change their product to make things more affordable, so that, you know, sitting in an existing home, you can't change your product. So I think that's one of the key things to watch, is how the new construction side evolves over the coming year. I again think I'm probably a little bit more optimistic than most on the new construction side. I think a lot have been calling for declines there, but, you know, it's been hanging in there and doing pretty well over the course of this year. The multifamily side is a little bit different. So apartment activity is at kind of record construction levels right now. So there's a lot of backlog to work through there. But on the single family side, you know, it's still kind of trending higher. So builders are finally working through all that backlog they had from the pandemic, and they're still selling completed homes pretty quickly. So I think that's something that's positive for Phoenix. There is the new supply coming from builders, but it's not so dominant that it's going to hurt the existing sales side. So that's kind of one of the things that I would definitely keep an eye on going forward, because it's one of the bright spots in the housing market right now is the new construction side.
What I hear from a lot of the builders and construction industry is they're competing for workers. It's really coming down to, with all of the industrial growth that we've got with Intel, with TCMS, I mean, just all of that has come into our market, and all the ancillary businesses that are coming. It's just a competition now for workers, and it's very difficult for them in a lot of ways. And then too, the new permits, there's a lot more scrutiny when it comes to our water supply. So that definitely has an impact on our market. But there's, you know, the good news is for the state and for Maricopa County in particular, there's a lot of thoughtful planning that's going into place. So we're very fortunate to live in such a great area.
Yeah, I agree with the labor constraints being the key constraint remaining really on the construction side. Supply chains have relatively worked themselves out. There's not the same shortages. Don't have to wait a year for windows. I mean, a lot of those headaches have resolved at this point. So I agree. Haven't looked into the local market there, but nationally that is an issue still. There's just so much demand for construction workers because there's all the different types, whether it's multifamily, single family, industrial. There's a lot of construction going on right now. So it's obviously slightly different workers, but some of those skill sets cross over. And so, yeah, there's still definitely a shortage of construction workers relative to what's needed for everything in construction.
For sure. We have a question that came into the chat. Thank you, Carrie. And I'm going to read this, and I think this will probably be more towards Ari. I see wholesalers, one in particular, will put a property under contract that expires in 30 to 45 days, and then unilaterally, without the seller's signature or knowledge, have a paper notarized and recorded that the seller cannot sell the property for X number of years without paying that wholesaler a fee, which then clouds the title. Most, if not all, of the sellers are in a foreclosure situation and could sell it to cure to cure the foreclosure. But now the title is clouded, so they let it go to foreclosure. They do not file with the Attorney General office because they feel beat up and hopeless anyways. And and I'm sure there's a lot of reasons why people don't, report these. Any feedback on how to handle something like that?
Yeah, I mean, it's a difficult situation because, a lot of these sellers in these distressed properties, they're taken advantage of for sure. And a lot of the contracts that the wholesalers have them sign are very one-sided, and some of them say right on them they could be recorded, and they do that. Some of them don't, and they're recorded anyway. And it can definitely cloud title. And the difficult situation is that usually those houses are distressed for a reason. Usually these people, that they don't necessarily have the money to hire a lawyer, and the Attorney General can be definitely a good resource in that situation. But yeah, it's very problematic right now with all of the proliferation of wholesalers.
Yeah, for sure. Well, we're almost at the top of the hour. I want to, again, thank both of you for your time today and then providing all of this information. It is very helpful for those of us planning into the new year, and then also just being aware of the issues that we're facing on the real estate market. It seems like people always get very creative with new ways to defraud people. So thank you, Ari, for that.
Yeah.
Shedding some light on that for us. And Parker, your knowledge, and I've had the pleasure of seeing you speak a couple of different times, and now having you on. This is we really appreciate your time and sharing everything that you're seeing in the real estate industry. It's extremely helpful, and thank you for all you do to support our industry.
Thanks for having me join. And yeah, like I said, I'm Econ Parker, econ_Parker on Twitter. So if you want to hear what I have to say, then I post daily on there pretty much. So, and feel free to reach out to me if you have any questions on the local markets, and I can do some digging.
Great. Yeah, thank you. In fact, let's if you can, let's throw in your contact into the chat. Ari, would you throw in your website and contact information in the chat for everybody? And then that way we'll get that out to everyone that was on the call today if there is any follow-up or additional questions. Sarah, is there anything that we didn't cover that we need to wrap up today?
I think we're good, Stacy.
Okay. For our audience, you are a critical part to the success of this program. If you have presenters or topics that you would like us to cover in going into 2024, please feel free to send that information to Sarah or myself or any of the sponsors. We are open to suggestions. We want this program to be of value and make sure that you're getting the information you need and covering the topics that are top of mind for you. So please feel free to reach out and let us know who you would like to have on our panel. And again, thank you, Ari and Parker, and thank you to all of our sponsors. Have a great day, everyone.
Take care.